Hi everyone, today we'll be going over accounts, May-June 2021, paper 3-1, question number 5. This is structured paper 3, which consists 6 questions, each of 25 marks, and we are also given a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 5 is a part of section B, which relates to cost and management accounting. Now, without any further delay, let's get started. N Limited produces and sells one product. The product has a unit selling price of 160, and the budgeted sales for July and August are as follows. So the budgeted sales for July is going to be that of 198,400, and the budgeted sales for August is going to be that of 240,000. Then we are given additional information. First of all, let's have a look at the given question. So for the first part of this question, we need to state two benefits of preparing a cash budget. So we know that while preparing a cash budget, we record or estimate all of our future receipts and our future payments. And there can be two cases. Either the receipts can be greater than the payments, which results in cash surplus, right? Or the second case is that the receipts can be less than the payments, which results in cash deficit. So cash budget basically allows us to see whether in the future coming days there might be a cash surplus or a cash deficit. So based on these information, let's list down our benefits. Alright, so the first one is that if there's a case of cash deficit, then we can arrange credit before the situation of deficit arises. So that's an advantage. Let's write it down. Arrange credit if there is a cash deficit. Secondly, the second case can be that of cash surplus, and if that's the case, we have additional cash in our company which we can invest in some profitable areas. So that will be the second benefit. Arrange investment if there is a cash surplus. Alright, this concludes the first part of this question. Now for the second part, we need to prepare a production budget in units for each of the months July and August. Alright, so if we're talking about production in units, then what we know is that the sales unit is just going to be the opening inventory unit plus the production unit minus the closing inventory unit, right? And in this case, we need to figure out our production unit. So that means that the production unit is just going to be the sales unit minus the opening inventory unit plus the closing inventory unit. So this is the statement required in order to figure out our production budget. Let's write it down. So we are preparing the production budget for each of the months of July and August. That's July and August. And the items to be included in this production budget is the sales units minus our opening inventory units and plus our closing inventory units. And this will give the total budgeted production for the months July and August. Now let's figure out our sales unit for these 2 months from our given information. We are given the total budgeted sales for these 2 months, and we are also given the unit selling price. And what we know is that total unit times the selling price per unit gives us the total sales, right? So we are given the sales as well as the selling price, and we need to figure out the total units sold. So for the month of July, that's just going to be the total sales, which is of 198,400 divided by the unit selling price of 160. So this gives the number of sales in the month of July to be 1240. Now we will repeat the same process for the month of August. For August, the total sales is that of 240,000, and we will divide it with our unit selling price of 160. Now this gives the total number of units sold in the month of August to be 1500. Let's record these two units in our production budget. So for the month of July, that was 1240, and for the month of August, it was 1500. Okay. Now we need to figure out the opening inventory for the month of July and August. So we are given the inventory information right here. Unlimited intends to achieve the following inventory level at the end of each month. So we're talking about the end of each month, which means that this is actually the closing inventory. Okay, so the closing inventory for the month of July and August is 300 and 200 respectively. Let's record these in our production budget. So we're talking about closing inventory, and for the month of July it was 300, whereas for the month of August it was 200. Okay, we will have a look at the information again in order to figure out our opening inventory. Then what we know is that Unlimited had 240 units in inventory on 30 June. So this is the closing inventory of June. And what we know is that the closing inventory of this particular period will act as an opening inventory for the next period. So if we're talking about the closing inventory for the month of June, that acts as the opening inventory for the month of July. So the opening inventory for the month of July is going to be 240 units. And again, the closing inventory for July is going to act as the opening inventory for the month of August. So the opening inventory for the month of August is going to be 300. Let's record these two units in our production budget. So the opening inventory for the month of July is the closing inventory for the month of June, which was given to be 240 units. And that's negative. So we will record this in a bracket indicating that this should be subtracted. Similarly, the opening inventory for August is going to be the closing inventory for July, which is 300. So that's 300 in a bracket. Alright, now we can figure out the budgeted production for the month of July and August. For July, it's going to be the sum of these three units. So that's 1240 minus 240 plus 300, which results in the budgeted production for the month of July to be 1300. Similarly, for the month of August, that's the sum of these three units. So that's 1500 minus 300 plus 200, which results in the total budgeted production for the month of August to be 1400. Okay, so this concludes the second part of this question. Now we can move to the third one. For the third question, we need to prepare a cash budget for each of the months July and August. Like I said before, the cash budget just consists of two portions. So the first one is the receipts and the second one is the payments. So let's write it down. That's the month of July and the month of August. And we will record our receipts section. Okay, let's figure out the receipts for the month of July and August. First of all, let's go over all of our information and figure out whether that should be recorded in our receipt section or the payment section. For the first one, we are dealing with the sales. So sales always results in an income, which means that this is a receipt. Then we already used the second information. For the third one, we are given raw materials, which is actually included in our cost of production, meaning that this is an expense. So we need to pay for these items. Then for the fourth information, we are given direct wages. Again, that's an expense, which means that this will be recorded in the payment section. For the fifth part, we are given information regarding fixed overhead, which is again an expense, meaning that this will result in a payment. And in the sixth information, we are given that a new machine at a cost of 40,000 is to be purchased. So while purchasing a new machinery, we definitely have to pay out cash, meaning that this should be recorded in our payment section. Okay, so since we're talking about a receipt section, we will only look at the first information. And we are told that cash sales are 20% of the total sales in all months. Let's figure out the cash sales for the month of July and August. So I'm just going to write it down here. That's cash sales. So for the month of July, we are given the total sales. And out of these total sales, only 20% relates to the cash one. So that's just going to be 198,400, which is the total sales, times 20%, which you can write down as 0.20. So this gives the cash sales made in the month of July to be 39,680. Now we repeat the same process for the month of August. For August, we have our total sales to be that of 240,000, and 20% of this is the cash sales. So that's 240,000 times 20%, which we can write down as 0.20. Now this gives the cash sales made in the month of August to be 240,000 times 0.20, which results in 48,000. So obviously we will be receiving these amounts for our cash sales made in the months of July and August, meaning that these should be recorded in our receipt section under the heading of cash sales. Let's do that. So we have cash sales. And for the month of July, we figured it out to be 39,680, whereas for the month of August, it was 48,000. Okay, let's go back to the information again. Then the remainder are credit sales. So out of the total sales, if 20% is the cash sales, then the remaining 80% will be the credit sales. And we are told that the remainder are credit sales receivable in the following month, meaning that the credit sales made in the month of July will actually be received in the month of August, and the credit sales made in the month of June will be received in the month of July. We are given the actual sales for June to be 240,000. So the 80% of this will be the credit sales, and the amount for that credit sales will be received in the month of July. So let's write down our information regarding credit sales right here. So the amount to be received for credit sales in the month of July is for the credit sales made in the month of June. And that is 80% of the total sales. So that's just going to be 214,000, which is the total sales made in the month of June. And 80% of it is the credit sales. So that's times 0.80. This gives the total credit sales received in the month of June to be 171,200. Now we repeat the same process for the month of August. And the credit sales received for the month of August is just going to be that for the credit sales made in the month of July, which is 80% of the total sales made in July. So that's 198,400 times 80%. Now this results in the credit sales amount received in the month of August for the credit sales made in the month of July to be 158,720. Now again, these are the amounts that we are receiving for credit sales, meaning that this should be recorded in the receipts section of the cash budget under the heading of credit sales. Let's do that. We have credit sales, and the amount for credit sales received in the month of July, we figured it out to be 171,200, and the same for the month of August was 158,720. Okay, and we already figured out that the information given in the first point was regarding receipts, and all the other information was regarding payment, which means that these are the total receipts. So we can figure out the total receipts for the month of July and August. For July, that's the sum of these two amounts, which is 39,680 plus 171,200, which results in 210,880. And for the month of August, it's the sum of these two amounts, so that's 48,000 plus 158,720, which results in the total of 206,720. All right, now we can move to our payment section. Let's have a look at the given information. So we have the information regarding raw materials. Raw materials are purchased in the month of production, and we already figured out the total number of units produced in the month of July and August in the second part of this question. Then each unit requires 5 kilos of raw materials at $18 per kilo. And in order to get a 2% cash discount, Unlimited pays its supplier in the month of purchase. So if we receive 2% cash discount, then we will only be paying 98% of the expenses regarding raw materials, right? So let's figure out the total expenses for raw materials for the month of July and August. And we need to look at our production budget for that. So what we know is that the number of units produced in the month of July is 1,300. Now we need to figure out the raw materials required for that 1,300 units. So that's 1,300 units, and we know that for each unit, the raw materials required is 5 kgs. So we can just multiply it with 5. And we know that the cost per kilo of raw materials is $18. So we can just multiply it with the rate of $18. And we know that we are also getting a 2% cash discount, meaning that we will only be paying 98% of this total cost. So we can just multiply it with 98%, which we can write down as 0.98. So this is actually the cost for the month of July regarding raw materials. That's 1,300 times 5 times 18 times 0.98, which results in the total cost relating to raw materials to be 114,660. Now we repeat the same process for August. The total units produced in the month of August is 1,400. And we know that for each unit, we require 5 kilos of raw materials. So that's times 5. And we know that the per kilo rate of raw materials is $18. So we just multiply it with 18. And we're also getting a cash discount of 2%, meaning that we're only paying 98% of the total cost. So we will multiply it with 98%, which we can write down as 0.98. So for the month of August, the expenses relating to raw materials is 1400 times 5 times 18 times 0.98, which results in the total amount of 123,480. And these are the expenses regarding raw materials, meaning that these are the payments made. So this should be recorded in our payment section under the heading of raw materials. Let's do that. We have our first payment of raw materials. And for the month of July, we figured out our raw materials expenses to be 114,660. And for the month of August, the same was of 123,480. Now let's have a look at another information. Okay, next one is the direct wages. And we know that direct wages are $40 per unit, payable in the month in which they are incurred. So the labor invested in the month of July will be paid in that particular month. In any month where sales exceed 200,000, the workers are paid a total bonus of 10% on the excess, and the bonus is paid 1 month after the relevant sale. So for the sale made in June, if the sales is greater than 200,000, then the 10% of the greater portion will be provided as a bonus in the month of July. Alright, so let's figure out the bonus for the month of July and August. For July, we have to look at the sales made in the month of June. And we are told that the actual sales for the month of June were 214,000 given right here. So let's figure out the excess sales. And we're talking about in excess of 200,000. So that's 214,000 minus 200,000. So the excess sales is that of 14,000. And the 10% of this 14,000 will be presented as a bonus in the month of July. So let's figure out the bonus amount. That's 14,000 times 10%, which you can write down as 0.10. So that's 1,400. All right, now for the bonus made in the month of August, we actually have to look at the sales made in the month of July. And we can see that the sales made was 198,400, which is actually less than 200,000. Which means that there will be no bonus for the month of August. And this bonus is also a payment made, right? So this should be recorded in our payment section. Let's do that. We can record it under the heading of bonus. So bonus made for the month of July was 1,400, and there was actually no bonus in the month of August. Okay, now we'll move towards calculating our total direct wages. Let's have a look at the information again. We know that direct wages is $40 per unit, which means that we again have to refer back to our production budget. Let's do that. Okay, so for the month of July, the direct wages will be the total units produced, which is 1,300, times the direct wages rate per unit, which is 40. So that results in the amount of 52,000. Now we repeat the same process for the month of August. The total units produced is 1,400. So that's 1,400. And the direct wages rate per unit is $40. So this gives the direct wages expense for the month of August to be 1,400 times 40, which results in 56,000. So these also relate to direct wages, which is a type of payment, meaning that these two amounts should also be recorded in our payment section of cash budget. Let's do that. We can record it under the heading of direct wages. And direct wages for the month of July is 52,000, and that for the month of August is 56,000. Okay, now we can move to another information. We are given fixed overhead. So fixed overhead for June was 60,000, and it is expected to increase by 5% from July. Okay, let's figure out the fixed overhead for the month of July and August. So this is just increasing by 5%. That means that the previous fixed overheads of 60,000 times increment of 5% can be recorded as 1.05. So this gives our fixed overheads for the month of July and August to be 63,000. Now of these, 60% of overhead is paid in the month it is incurred and the remainder is paid in the following month. Okay, so what we know is that the fixed overhead for June is 60,000, and out of this, 60% will be paid in the month of June, whereas the remaining 40% will be paid in the month of July. Okay, so let's figure out the total fixed overheads expense in the month of July. That's 40% of the month in June. So that's 60,000 times 40%, which you can write down as 0.40, plus 60% of the fixed overheads in the month of July. And we figured out our fixed overhead for the month of July to be 63,000. So that's 63,000 times 60%, which you can write down as 0.60. So the total fixed overheads paid in the month of July is 60,000 times 0.40 plus 63,000 times 0.60, which gives the total fixed overheads to be 61,800. Now we will figure out the same amount for the month of August. For the month of August, we will be paying 40% of the overhead for the month of July, which we figured out to be 63,000. So that's 63,000 times 40%. Then we'll also pay 60% of the overheads for the month of August. So that's again 63,000 times 0.60. So this gives the total fixed overheads paid in the month of August to be 63,000 times 0.40 plus 63,000 times 0.60, which gives total to be 63,000. So these are the payments made for fixed overheads, which means that these two amounts should also be recorded in the payment section of our cash budget under the heading of fixed overheads. Let's do that. So we have fixed overheads. And for the month of July, it was 61,800. And for the month of August, it was 63,000. Okay, now we can move to another information. We have a new machine, which is to be purchased in August for the cost of 40,000. So this is the payment to be made in the month of August. Let's record it under the heading of machinery. So that's a new machine. And the amount is being paid in the month of August. So that's 40,000 payment. And there is no payment in the month of July. Okay, this concludes all of our payments. So we can just figure out our total payments now. Okay, the total payment for the month of July is going to be the sum of these four amounts. So that's 114,660 plus 1,400 plus 52,000 plus 61,800, which results in the total payments to be 229,860. Now we'll repeat the same process for the month of August. That's the sum of these four amounts. So that's 123,480 plus 56,000 plus 63,000 plus 40,000, which results in the total to be 282,480. Okay, now we figure out the net receipts, which is just the difference between the total receipts and total payments. So for the month of July, that's going to be the total receipts of 210,880 minus the total payments of 229,860, which results in the negative balance of 18,980. So this is the net. We repeat the same process for the month of August. That's going to be the total receipts of 206,720 minus the total payments of 282,480, which results in a negative balance of 75,760. Now we adjust our opening cash balance and figure out the closing cash balances. Let's have a look above to see the opening balance for the month of July. We are told that the cash at bank at 1st July is expected to be 80,600. So this is going to be the opening balance for the month of July. Let's record it. That's 80,600. Now in order to figure out the closing balance, we just adjust the net to our opening balance. So that's going to be minus 18,980 plus 80,600, which results in the positive balance of 61,620. And we know that the closing balance of this month will act as the opening balance of the next month. So the opening balance for the month of August is going to be 61,620. Now, in order to figure out the closing balance, we just need to adjust the net to the opening balance. So that's minus 75,760 plus 61,620, which results in the negative balance of 14,140. All right, this concludes our cash budget as well as the third part of this question. Now we can move to the fourth part. Okay, we were given the working section right here. So instead of scribbling all over the question paper like I did, you guys should be mentioning all of your workings in this particular box. We are given additional information. N Limited wishes to improve the cash position at the end of August and wants to have a minimum ending bank balance of 24,500. So in our cash budget, we actually ended up with the ending balance of the negative amount of 14,140, but now we require a positive balance of 24,500. And in order to achieve this, one of the directors proposes that a cash discount of 4% be offered to some of the credit customers in August so that they will make an early payment in August. Now we just need to figure out the minimum amount of credit sales to be offered, the cash discount, in order to achieve an ending balance of 24,500. Okay, let's have a look at our cash budget. So this ending balance of 14,140 is just the net plus opening balance, and this net is just the total receipts minus payment, right? And we require the change in the receipts value now because we are also providing a cash discount so that the credit customers make a prompt payment. So we will be required to find this receipts amount in order to require the closing balance to be 24,500. So that's just going to be the receipts minus payment of 282,480 plus the opening balance of 61,620. Let's write it down in the form of an equation. So we have our receipts minus the payment made was actually of 282,480, and we also have to add the opening bank balance, which was of 61,620. And this will give our closing bank balance, and we require the closing bank balance to be 24,500. So now we can easily figure out our required total receipts. So that's just going to be 24,500 plus 282,480 minus 61,620. So this gives our total receipts, or the new receipts, to be 245,360. Now we just figure out the increment in the receipts. So that's going to be the new receipt minus the old receipts. So the new total receipts, we just figured it out to be 245,360 minus the old receipts. Let's have a look at our cash budget. So the old receipt was that of 206,720. We just need to subtract it. So that's 206,720. So the increment in receipts is 245,360 minus 206,720, which results in 38,640. And this increment in receipt is actually the amount received for credit sales. And this amount is received after allowing a 4% cash discount, and we are required to figure out the amount of actual credit sales rather than the discounted value. So what we can say is that the amount of credit sales, we are giving a 4% discount, meaning that we will only receive 96% of the total sales. So that's times 0.96. And this results in the credit sales payment value of 38,640. Now we can easily figure out the amount of credit sales. So that's going to be 38,640 divided by 0.96. This gives our total amount of credit sales to be offered the cash discount in order to achieve an ending balance of 24,500 to be 38,640 divided by 0.96, which results in 40,250. Okay, this concludes the fourth part of this question. Now we can move to the fifth one. We need to explain two other methods to improve the cash position at the end of August. Okay, let's have a look at our cash budget. We can see that the payment was made of new machinery, and that's 40,000. So if we are to not include this in our cash budget, then we will definitely get a positive closing balance for the month of August, right? So that's a method. Let's write it down. delay purchase of machinery to a later month when more funds are available. Okay, and for the second part, we actually need to purchase the new machinery, and that's why we are getting a negative closing balance. So instead of using that particular amount, we can issue shares, as the non-current assets should be financed by the long-term funds. Let's write it down. Issue shares. So this will result in cash receipts, right? As non-current assets should be financed by long-term funds. Okay, this concludes the fifth part of this question as well as this entire question. If you found this video useful, make sure you like the video and leave a comment below, and make sure you're subscribed to the channel so that you do not miss any of these videos in the future. Thank you.